So when we're doing our taxes, we have our taxable income. And I did a video on some of the surprising factors that are actually going to be taxed. So if you haven't seen the video that deals with our taxable income items, go ahead and check that out. But in this video, I wanted to take the opposite side. And now we're not including it in income. What we're looking at are some surprising type of deductions that we may be able to take. Now, most of these deductions are going to be related to business type of deductions. So if you're an independent contractor, freelancer, or you have that gig, well, guess what? This is what's looking at yours. This is up your area because this is things that you can actually deduct. We love the deductions because it's going to lower our taxable income. Now, my name is Brian Winrow. I'm a tax attorney, tax professor. So let's go ahead and take a look at some of these deductions that we can take that we may not always think about. All right, so here are some of those deductions. The first one's going to be your bad debt if you have a business. So your bad debt expenses are going to be things that you went ahead and you sold an item and the person's supposed to go ahead and pay you back. So once you have those items, you're including it in income, so taxable income, so you're having to pay taxes on it. Well, you know what? Now they haven't paid you back. So this is where you're able to take that deduction. So that way it's going to reduce your taxable income, because before it was included in your income. So the next one is going to be legal and professional fees. Again, this is going to be things that are related more toward business. So if you're getting help on your taxes, right, that's generally not going to be deductible if you're an individual taxpayer who isn't engaged in a business. Now, if you're getting help or legal fees on your business, well, those are ordinary and necessary business expenses. We're going to be able to go ahead and we're going to be able to deduct those for you. So accounting, tax prep, legal advice related to operations, all of those things are going to be deductible expenses. Don't miss those. Go ahead and take those. Make sure you're getting those deductions. And guess what? When we're dealing with a business, we're not dealing with things like itemized deductions here. We're dealing with ordinary necessary business deductions. Those are above the line, so they're going to be really helpful for you. All right. Next one, advertising and goodwill. So if we have advertising expenses, we're able to take those. Now, remember, what you're looking at are things that are going to be like ordinary and necessary. They're advertising, they're used for your business. So it's not always as easy as just saying, oh, well, that was basic advertising. I put a radio commercial on and guess what? It's deductible now. Sometimes it's a little bit more complicated. Let me tell you about a case that was decided years and years and years ago, back in like the 50s or 60s, back in that time frame. We have this shop owner. They actually own a gas station, and they're trying to figure out how do we get customers into our business. So what do? Well, they start out with things like those little milk coupons. If you buy so many gallons of gas, and you can get a discount on your milk, or maybe eventually a free gallon of milk. Well, guess what? Everybody was doing that, and it wasn't working. It wasn't helping with their business. So they sit down and they say, well, what do people like? And they come up with beer. People like beer. So they come up with this. They say, let's go to the gas station. Let's buy a bunch of beer. Let's buy some cases of beer. Let's bring them back to our gas station and let's start loading them in the refrigerator. And then when somebody comes to our gas station, we're full service. Somebody's going to be filling up and checking their windshield wipers and all that stuff for them. But while they're over here getting that taken care of, they can come in, head to the cooler, and they can have free beer. They can start drinking beer while that's happening. And after they're done, after the car's filled up and ready to go, then they pay for their gas and they go, but the beer is free. So that's what they start doing. Now, as an attorney, I can tell you that causes me nightmares because I don't know about you, but loading up people with alcohol while they're driving and waiting for their gas to fill so they're going to be driving even longer probably is not the best thing. It keeps me up, gives me nightmares about if I'm representing that client, oh my gosh, when am I getting that call? But the gas station decided to go ahead and they decided, yeah, we're going to go deduct that as an advertising expense. The IRS said, there's no way you can deduct free beer as an advertising expense. The courts held, hey, ordinary and necessary. It was a promotional expense. So it was there to promote their business. It's an advertising expense. They were able to go ahead and deduct that cost. So if you're looking at marketing, sponsorships, those types of things as well, yeah, those, if they're ordinary necessary business expenses related to your business, then you're going to be able to deduct those costs as well. And then supplies and materials, that one I put on the list. I think most of us are aware of those items that you might have, such as envelopes if you're sending things out, notepads, those types of things. Yeah, those are going to be deductible expenses for us as well. Okay, let's go to our next set of deductions so we can see some more of these surprising deductions. All right, so here's our next set. The first one we're going to talk about is going to be our business use of your house. So if you have a home office, you're going to be able to go ahead and you're going to be able to deduct the home office from there. So that's very helpful, but it has to be used exclusively and regularly for your business. So if you have something like a home office in your dining room and it's also where you eat your meals, or in your living room and you're watching TV there, or it's in your bedroom where you also sleep, or the garage where you park. I mean, it doesn't really matter. If it's not used exclusively for your business, it's not going to be deductible. But if it is used regularly and exclusively for your business, it can be deductible as a home office. So then we can start looking at deducting things such as maybe some of your interest that you pay on the house. Maybe you're going to get some of the utilities, insurance. Those types of things are all going to be deductible expenses. And I have a full video that walks you through home office expenses. So take a look at that. I give you a pretty long list of different types of expenses associated with that. And you know what? You can also rent your house to your business. That's part of the Augusta rule. There's another video that walks you through the Augusta rule. So check that out too if you're interested in trying to figure out different ways that you can use your home as a business expense. Other things, impairment related work expenses. So if you have something, you have an impairment and it's going to be able to help you go ahead and perform your job, those are deductible expenses you're going to be able to take. Education expenses. This is one a lot of people miss. So if you're already engaged in a business and you're trying to maintain or improve your existing skills, then you're going to be able to go ahead and if you're paying those expenses, you're going to be able to deduct those expenses as part of your business expenses. So that can be a deduction as well. So continuing education, those types of things work really well in that opportunity. Now, if it's there to create a new profession, now we have limitations on that, right? So if you're an accountant and you're trying to go to law school, now it's giving you the qualifications to be able to enter a new job. That's not going to be deductible. And then the final one's going to be the outplacement service. When you're looking at that one, that's in order to help other employers, your employees go ahead and find new positions if you've let them go, downsizing, whatever the cause may be. You can go ahead and you can deduct those expenses. Now I've got one more set that we've got to look at, and let's go ahead and take a look at those. Okay, so let's go ahead and take a look at the final three types of deductions. But before we do, if this video has been helpful, go ahead and subscribe and press like so that way you can get more updates. I'm going to continue to talk about things related to deductions and income, so be on the lookout for that. All right, so the first one we're looking at is going to be moving machinery. So if we have to relocate some of our business equipment, guess what? That's going to be deductible expense. So if we're relocating or we just have to deploy it to a different area, we can take those as transport and installation expenses. No problem, a deductible expense. Penalties for breach of contract oftentimes surprise taxpayers on that. So if you have a business-related damage, so you're not dealing with government fines, that's different when you're dealing with government fines. But if you were sued for breach of contract and you have penalties for that, then you're going to be able to go ahead and deduct those as business expenses. And then finally, certain meals. So business meals are partially deductible. You don't get 100%. What you get is 50% if there's a business-related activity associated with it, and you can't go very lavish on this. But if you're meeting with clients and you take them out to business, you're going to be able to deduct 50% of the cost of those meals. Entertainment expenses are not going to be deductible though, but the meals are going to be deductible up to 50% for purposes of tax. All right, well, thank you for watching this video. And like I said, be on the lookout for more additional videos that help you understand deductions and also income, what has to be included in your income.